Welcome back to another schema scalper video. In this video, this is going to be more of a interesting ideas type video, so it's going to be part of that playlist. But if you're new here, go and check out my playlist on the footprint chart. That's what I'm busy with now. I haven't posted in a while just because the thing that I'm busy with, it's very intense. It's a lot of study, and it's just, I don't know, kind of boring to watch videos about that because it's a lot of like number crunching, finding new edges. Oh, yeah, things like that. And I've actually got a small update for you guys. This is something I can show. I'm now using TPO charts, so time price opportunity charts. You can get this on TradingView, but unfortunately, you do need this subscription. Oh, let me just reload this page. You do need this subscription, so it's is a bit on the plus side. Oh, Spotify advert. Yeah. Let me do this. It's this one over here. I'll give you 8 charts per tab. I don't really care about all the other stuff, but this is what I was looking at. I need TPO, footprint. I don't need tick-based intervals. I don't really care about that right now. But that is what you do need if you want to trade TPO with TradingView. There are other platforms. I know Ninja Traders, Sierra Charts. I'm not too familiar with anything else. I'm not sure on. Nah, Jigsaw doesn't have. Jigsaw is more of like just your DOM mainly. Yeah. I'm not sure on Jigsaw. Okay. But let's get back into it. So I'm using these TPO charts. So you'll see what I have highlighted is poor extremes, and then complete auctions. So I'm looking at the previous. Well, I'll get more into this in another video. But I'm looking at the previous day. Is it complete auction? Is it a poor high? Was there reaction at point of control? Things like that. And then obviously the value areas. Okay, let's put that aside. So this box right here, that's the value area. The thing that's overlaid on my chart is VWAP with bands. Let me just go into that settings. I'll show you guys. So it's 1, 2, and 3 standard deviations of VWAP, and this is session VWAP. So the idea is when it's outside this bands, you don't want to sell. Like all in this area, you don't want to sell. Sorry, you don't want to buy because it's imbalanced down. My bad. And up here, that's no selling. So here you want to buy, here you want to sell. And this gets you on the kind of right side of the market, especially when it's trending days. You can use this even in some sort of like consolidations. So, for instance, like a day like this is actually Thursday. Yeah, this is actually today's data. Sometimes I forget. Um, you can use this to get on the right side of trends, even in like consolidation. If you have a narrative, which is why we use the TPO charts, time price opportunity or market profile, as people call it. It's actually TPO. But when you use TPO charts, that gives you like a framework. Like I can see the extremes, and that, for instance, if I'm here, I don't want to take a sell before it kind of fixes this extreme. But we'll get back into that. I'll get back into that. I'll make a series on that. But right now we're looking at footprint, and this is something interesting that I saw on footprint. I have to give like context to what I'm doing because otherwise you're just gonna say, "Oh, he's cherry picking, he's cherry picking." But this happens all the time. I'll show you 2 examples of this. And this is like, it's today and yesterday. Yesterday was closer to the end of the day. Whoops. How do I disable that? Ah, let it go, it's fine. Um, Let me pause this video and see how I can disable that. You know what? Never mind. I don't really care. Uh, so we've got poor extremes. We fixed that poor extreme. Now we are imbalanced down with VWAP. So we're getting into this value area. We're inside. And now this is where the magic happens. I'm going to change over to a footprint chart. And now we're going to get super granular. But because of the monitor, I'm actually not using a monitor. I'm just on my laptop. If I connect up a monitor, you'll see more levels or more data with a footprint chart. For now, we're gonna have a zoomed in kind of look, and we're gonna look back from 2 o'clock in the morning, 2 a.m. So here it's hovering at that point of value area high, which is this gray line. It's actually a box, this gray box. So value area high to value area low, that's our opportunity, our area of opportunity for now. So what we're looking at is number one, how do I do this now? Text. So one, we're looking at increased buying, and then two, no, how can I say? What's the word for this? No kind of reward for buying. So, and then three is aggressive selling entry market. Or let's change it to it's very important, large aggressive selling. That is important. Large aggressive selling entering the market. So this is what we're looking out for now. Once we're within this kind of framework, so we understand that, or I'll go through that in another video. On how we use market profile. It's the same as volume profile. I think I did a video on volume profile. If you're at value area high, you're gonna probably go all the way through and work your way through to value area low, things like that. But for this is how you kind of catch the edges using footprints. So you're gonna see now, we're obviously looking for, well, not obviously, we're looking for a move since we are inside now at this point. Where is this thing? So yeah, we're looking for a move that's going to continue lower. We have this kind of acceptance of this VWAP. Just going to undo all of that. We have acceptance of this VWAP, so we know it's trending now. It's trending. It hit its consolidation, which is this area. And what we're expecting is a move all the way down to the value area low, and then ultimately to these poor lows, poor extremes. I just say poor extremes instead of poor highs and poor lows because it's easy. I can just make a template for that. Okay, so what we're looking for now in the footprint chart is this increased buying, no reward for buying, and then large aggressive selling entering the market. I'll go to 2 o'clock. So here we enter, here's aggressive selling, but that's just as we enter the level. So this could have been the exact same thing, but the opposite way around. So it could have been increased selling, a flat price, but still with increased selling, like what was happening here. And then as soon as we see this level, we're moving away from the level with increased and really aggressive buying. So that's on this side of the tape, on the right hand side, or right hand side of the footprint, sorry. We would see increased buying, and then we would end up going long. Yeah. So that's what we could have seen, but this is what actually happened. So you have 2 o'clock, see this large selling, but in the order we want it is, where is this thing now? We want increased buying, no rule for buying, and then large aggressive selling, which is what we get here. Okay, we have increased buying with no reward. You see how price is just being stagnant, not moving up? That same level, there's more buying, no reward. Goes lower, here's 30 50 contracts, doesn't go higher. Okay, and boom, nope. There we have 30 and 27, doesn't go higher. We have 33, it's not going higher. So we've reached kind of like a bottom here. Shift. So we've reached kind of like a bottom here. So if we see increased selling after this point, we can then go short. Like here, for instance, that's the increased selling we want to see. So we can go short here. That's one opportunity to go short. Here's also increased selling, opportunity to go short. The buyers are not getting rewarded, price is not going higher after there's a lot of buying. So in this level, I'm going to show you something cool real quick. If you just look at these two levels over this, what is it? 15 minutes. So it's 5, 3, 6, 9, 12, 15. Not counting this last candle. So over this 15 minutes, we've got 30, 60, 90, 120, 150, 150 contracts that went long. Around 150. Around 150, and they're not pushing the highs. And there's such a little contracts that's going short. So this is what you're kind of looking out for. So here's 10. Okay, only looking at this two level. That's 10, 13, 30, 35. So it's 35 versus 150. And they're keeping it, like the sellers are keeping it there. So that's a indication that these are not active, only active buyers. There's some passive sellers in here as well. I'll go over active and passive sellers and buyers in the next footprint video I'll do. But yeah, so that's an opportunity to go short. As you can see, the amount of contracts short here is much larger than anything for the past hour. So if I go back an hour, so 130, we're going to look at the largest amount of selling. There's a 26 here, a 42 over here, 20 over here, 20 over here. So it's that 42, that is the largest amount of selling, but we didn't get any like real buying, and like kind of buyers not getting rewarded, and no buyers were getting rewarded for their buying. So down here we get that. Down here we get that because this market has already gone lower, even with the huge amount of buying in these two levels. And now you're gonna see where the magic really happens. So you have a huge amount of buying here, and it doesn't push price higher. So it's 152 contracts buying, doesn't push price higher. That's immediately a sign that, hey, the market's going lower. Now, how you take advantage of this is you go short, or you could go short. There's not financial advice. You could go short right after this, after you see a huge amount of buying at the extremes of that candle. You close below that candle, you go short. Your stop is the previous area where there was a lot of buying, one tick above that. And usually for pound futures, I use between an 8 and a 10 point stop. If the stop is closer than 8, ticks, I'll just make it 8, just so that I don't get kind of squeezed out of positions. And then the largest like size I use is 12, so it's between 8 and 12, with 10 being the usual option. And you targeting value area low, so it's 1 to 3 risk to reward. That's good. But I'm gonna show you something even better. I'm gonna show you this. So this area, you can see there's no selling, but price stops right there. Price stops here, there's no selling. So this means that in this 3 levels of price, in these 3 levels, there's been, oh, let me get that, passive selling. There's been passive selling at 3 levels. So that's people that are getting in with not market orders. So it will show up here as orders, but there are different types of orders. You get market orders and you get limit orders. These are people entering the market on limit orders. Or let me rephrase that. These are people getting into positions on limit orders. You can see the zero selling, but somehow it stops there. To me, either that's A, people getting in on limit orders, B, a drying up of buying, or C, just bad data from this TradingView, which I don't think it's C. And then you see in here as well, you get this huge amount of selling, which is here 100 plus contracts. And then for each market also, this is why you need to start with one market. If you're trading footprint, start with one market, understand what is low volume, what is high volume, when there's like a switch in the tempo, and how you can identify. So for instance, this 104, this 66, this 53 and 50 over 2 levels. These are all important points, and these are all like the market kind of tipping its hat saying, hey, we're going to go lower, we're going to go lower, we're just waiting, we're just waiting for the right people to step in and for the right amount of contracts to step in. And now you'll see something cool here as well. After this kind of passive selling at the, so we add VWAP also. So things will start aligning with this. We add VWAP, we add this extreme of TPO, TPOH, or value area high. I'm just gonna leave it as TPOH. We add the VWAP, VWAP -1, and then we have this kind of passive selling. So after this candle forms, now you realize, okay, even if you are, let's say you had a smaller stop on this position, right at the high, 1 tick, you get stopped out. Now you look at this low and you can say, hey, I'm waiting for re-entry at these lows. As soon as this low breaks, this can be a kind of a momentum play, because you see here there's 104 short, there's a level of 95 short, level of 53 short, level 63 short, all in one candle. So this is saying like sellers are stepping into the market. And what's crazy about this is on the footprint chart, you can see sellers are stepping in. They're pushing price lower, and every time they step in, price is going down. So they're getting rewarded. Right here, they don't get rewarded, but on the next candle, they also don't get rewarded. And then over here, you see them get rewarded again. At 50 contracts, it's going lower, 51, it's going lower. And when you look at it, over just this one level is highlighted. Let me just put on the background so you can see it better. Let's zoom in as well. Over this one level, we've got 95 contracts, 85 short, 9 short, 45 short, 85 short. So that's a reinitiation of that level. So there's people in here They're saying, hey, price is getting back there. That's a good area to sell. I'm gonna sell more. I'm gonna sell more. I'm gonna sell more. I'm gonna sell more. And you can see on this level, I actually made a call out. So over that one level of price, there was 400 aggressive sellers or passive buyers on that one level. So that's already tipping off saying, hey, if we break, this is kind of a consolidation for like 15 minutes. If we break these lows, market's going to continue going lower, and it's going to do that in an aggressive fashion. You can see even here, there's 111 buyers that are stepping in. 111 contracts short, and the market's just continuing to go low. Continue going low, continue going low until it reaches value area low. And then over this level, there's 3 levels. There's actually like around 800 contracts short. And this is in what? Space of from 3 o'clock till, you can say, half an hour. In the span of half an hour, we've got 800 contracts going short. And I'll bring up a volume indicator and I'll show you this. So in that time, there was, so I'm looking up here at this volume number, 70, so that's 200 cumulative. Kind of excluding this because half of that candle is outside the consolidation. But if we add half, let's say 600, so that's 800, it's 1000, 1200, 1300, 1400, 1800, 2000. Oh, and exclude that one as well because that's the one that broke out. So that's 2000, 1800 volume traded here. And of that 800, of that 1800. Oh wait, I should actually add that one. So it will be 2400. Of that 800 was aggressive shorts in 3 levels. Just 3 levels of price. And you can look at, so if you look at like if you look at it like that, it's okay. We have a third of the selling. A third of this area is selling. But when you look at it, a third of this area over 3 levels of price is selling. So once it breaks the one side of the extreme, you know, okay, I can go in the direction of that because the people who are in here who are long want to get short after it breaks that low, and the people who are in here that are short want to kind of add to their positions and add to the winners or add to the winning positions when it breaks this low. So it's kind of like a snowball effect where if I'm stepping out the way, as soon as I step out the way, there's more momentum in that direction, and with more momentum in that direction, there's more people that will jump and push it further, or more contracts that will jump and push it further. Yeah, and it's something I'm looking into, especially this three: increased buying, no reward for buying, large aggressive selling. That's like the kind of 1, 2, 3 I'm using as entries. Obviously, after I have narrative, after I have understanding of where the market wants to go, where the market's likely to go through the use of TPO charts over here. And yeah, that's just something interesting to me. Actually, you could have even targeted lower to these poor extremes because the market usually uses this as magnets. But yeah, I'll go over that in the near future. TPO, poor extremes, um, finding good balance, all those things, I think I'll make a little video series on TPOs. But if you enjoyed this video, leave a like, and subscribe. We're almost at 500 subscribers. 500 subscribers. Yeah, cheers.